let's say FTX had come to the UK and got a license in the UK and then had gone down, right? Can you imagine the reaction? I knew pretty early on actually that I didn't want to be a lawyer forever.
Right, really?
Yeah, pretty early on.
Oliver Tonkin was supposed to become a lawyer. He didn't. Instead, he co-founded BCB Group and built a company that processes over $200 billion of crypto payments from the ground up through some of the hardest years the industry has ever seen. Today, he sits down with Sam to talk about survival, leadership, and what's next for crypto.
It is very fast moving, and you cannot be complacent. You cannot be overconfident and keep the work going, because if you don't, there's a lot of very hungry people out there that are going to come along and take the market that you've created for yourself and make it their own.
Yeah, that's true.
I wish I could say to you that it was a master plan from the start. It was not. And
everyone says institutional grade, right? But what does it actually mean in your terms?
You know, as Warren Buffett once said, when the tide comes out, you know who's been swimming naked.
But do you find that it's get more challenging as a company scale to a bigger size, or is it smaller is easier?
Probably it's harder as you get bigger, because the downsides get bigger.
Yeah.
I think anybody that says they're brilliant at hiring is a liar. Because I think you know, until somebody literally starts working, you can do all the DDing in the world, you can take references, you can interview them, do blue in the face. Until they actually start doing the job,
right,
you're never going to know for sure how good they are. The approach to a certain point, I think that it's a shame that we had an opportunity, like in so many ways post-Brexit, we had all these freedoms and then didn't really take advantage of them.
Yeah.
That combination of those two things were a toxic combination for a lot of the businesses that I work with already struggling. I think there was genuine concern that the industry was going to cease to exist.
Was it scary or? Hey, Oliver, thank you so much for doing this. Great to have you, and welcome to the podcast.
Thanks for having me. Really appreciate coming on.
Great stuff. Let's get right into it. So, BBC Group has processed over 228 billion in transaction volume. In 2017 and the years to follow, many people were thinking about the short-term profits, short-term gains, and mostly people were building into, for retail users. And so, but then you and your co-founder decided to build infrastructure for businesses and institutions. Looking back now, after 10 years, what did you see at the time? And was there anything, any conviction that you had that this is what we want to do?
I mean, I'm going to be honest and say probably not. I mean, there was a degree of sort of right place, right time,
right.
A little bit of sort of what they politely call emergent strategy.
Yeah.
So you sort of you solve a problem for yourself, which is that what we did. So I mean, we started life as some people know as a brokerage ourselves, and we were doing that sort of high net worth sort of concierge type service just for literally in and out of many Bitcoin at the time, because it was a very, very different time in the evolution of the market, and we struggled to sort of settle our own trades through banks. I mean, it was a difficult. It was very hard to find banks that would kind of play. There was no licensing regime. No one really had any kind of comfort around anyone that was operating in what we were doing. So I mean, we came up with the idea to sort of build our own proprietary payment business for ourselves, just for our own trades, and so we got a small license from the FCA in the UK, and that enabled us to access banks that would deal with a payment firm but wouldn't deal with a crypto OTC desk effectively. And that was the sort of genesis of what became BCB, because obviously we'd solved our own problem, and people heard about it and they started to approach us and said, well, can we use your rails? Can we pay you even better to sort of use the rails? And so we sort of realized that actually the problem that we'd solve for ourselves was the market's problem, how to sort of get certainty of execution on the fiat side really, really quickly. And so we pivoted away from just doing OTC and really majored on kind of payments. And so, what did we see? I mean, we solved our own problem and then realized that we solved the market's problem too with a degree of investment and scale. We could solve would solve at a sort of wider level problems that everybody else had too. So that's really how the payment side of the business, which is clearly what drives a lot of the revenue today, really evolved. And so I wish I could say to you that it was a master plan from the start. It was not. But I mean, that doesn't mean that, you have an idea and you see an opportunity. Yeah. You've still obviously got to kind of execute and deliver on that opportunity, which I'm pleased to say we were able to do.
Yeah. And now, did you ever think that the company will have this much growth at looking back at it?
It's a good question. I mean, I was asked that in the early days. It's like, why wouldn't this kind of succeed? And somebody and my answer at the time was, I mean, because I had really good confidence in the team that we had at the time and the energy that the early stage sort of team had. And my feeling was that unless something happened to the market, which sort of rendered, which either it would disappear or something, I always had pretty good confidence that we could make a successful business doing what we were doing. I mean, did I ever think that we were going to do billions of pounds a month of volume? I mean, you always hope that you will, right? I mean, everybody that starts a business hopes it's going to become a massive success. Most businesses don't, and I mean, I've seen lots. I've done other things in the past and seen other businesses fail. So I mean, most businesses don't. Most businesses that people start don't succeed. They just either die or they wither away or someone buys them or whatever. So I mean, it's a. I was always hopeful and optimistic and confident, but no, I mean, no one could be absolutely sure that what they're going to do is going to work.
It must have been a good feeling though, right? Like see the company that you co-founded is growing. Like, what's it been like for you?
It's been a good. I mean, it's been great. I mean, it's not been easy. I mean, there's been ups and downs along the way. I mean, some very challenging times and some good times, but some very challenging times.
Yeah.
It's satisfying. I don't think I'm not going to sit here and say the job's done, because I mean, you're only as good as your last quarter. You're only as good as your sort of last happy customer, or whatever. So I mean, there's always a degree, particularly in a fast-moving industry like payments and digital assets. It is very fast-moving, and you cannot be complacent. You cannot be overconfident. You've got to keep your nose nose to the ground and keep the work going, because if you don't, there's a lot of very hungry people out there that are going to come along and take the market that you've created for yourself and make it their own.
Yeah, that's true. And in a way that you have, like you talked about, you're only good as your last quarter in recruiting, which I
same
do.
Thing, right?
Right, same thing.
Yeah.
Like you have to be. Well, we say you're only good as your last placement, right? So it's still a cutthroat environment, right? Like
it is.
In payment.
I mean, business is generally cutthroat. I mean, if it's not competitive, it's not really business, is it? I mean, your competition is ruthless and it's relentless, and you've got to. There's always someone coming to eat your lunch.
Yeah, true. And before you were at BCB, you spent 25 years in law, finance, restructuring, and special situations. It's a long.
12 years. Yeah. Well, it's only 20 years, but yes.
20. Yeah. I'm making you older.
I'm not that old.
But it's still a long career.
Yeah, for sure.
And I wondered, like, what was the most memorable job you had?
That's a great question. I mean, most memorable. I mean, I've done a lot of things. Obviously, I've been a practicing lawyer for a number of years. Worked in industry for a number of years in sort of financial services, primarily kind of corporate and M&A work. I mean, I've had some really interesting experiences. I mean, the business that I was involved in before BCB was an investment business, and we invested were involved in businesses that were very different from the fintech that I now do. I mean, it was the oldest of old economy. It was aluminium extrusions and plastic components and car parts and bakeries. So I mean, it was a really different. So I mean, I've done some really about as different as you can possibly get from this. In terms of memorable. Going to factories in all parts of this country and seeing people making stuff, and I think that, I'd never really given any thought to most people don't
Yeah.
give them any thought to sort of how things are made. And I think seeing a process of a lump of aluminium being turned into something that people use in probably these metal structures here are probably aluminium extrusions, right? So I mean, seeing how that comes from a block of metal to something like that, it's a hard job. And I mean, I've got staff that are doing programming and finance and operations and sales, very far removed from these guys that are getting hot and sweaty and in a factory. So I think that it just brings it home. It brings it home to me that the economy that we operate in is very diverse,
right?
And everything that's just got a value. Just as financial services have a clear value, that's just got a value too. And so I think that's always sticks in my mind. Going to places where people are actually physically making things. I always think it always fascinated me.
Right. I mean, I went to university in a place called Kiel, which is near Stoke-on-Trent.
Okay, yeah.
That's where they had the pottery industry.
Yes, that's right. Yes, all the china and
right.
everything else. Yeah.
But I think that's gone now, right? So
it's almost gone. Yeah, pretty much almost gone.
Yeah,
sadly,
it's crazy. Yeah, crazy. And so you must have seen a lot of businesses fail.
Yep.
And was there anything in particularly that you saw that this is the kind of the main reason why business fail? And also, was there anything that you learned that you implemented in maybe running BCB, perhaps to avoid that, right?
Yeah, I mean, look, it was a different time. I mean, what I was doing then was in the sort of aftermath of the financial crisis. So there were a lot of businesses that were in a really difficult situation. We tended to find that the common theme in all those businesses was some form of leverage and specifically over leverage.
You mean like debt or
a lot of debt? A lot of businesses in the sort of period leading up to the financial crisis had over levered. I mean, they borrowed money. They borrowed against their plant machinery, against their factory, against the real estate. Sometimes even against their debtors. So I mean, they were leveraged up to the hilt effectively. And of course, then when a very sharp downturn comes along, where, as Warren Buffett once said, when the tide comes out, who's been swimming naked. A lot of people have been swimming naked. So I think certainly I've got a slight aversion to leverage, or certainly over leverage. Right. So I'd be reluctant to. Equity is always nicer than debt.
Right.
So I would certainly, that's certainly something that I'd learn from and like not to do. I think hiring well is very important. I mean, again, one of the challenges historically of British industries is that the caliber of people, and this is not, I mean no disrespect to many good businesses out there, but I think the talent in sort of Britain has been, in the last sort of 40, 50 years, has been directed more towards financial services, finance, law, banking, that kind of thing, and away from the manufacturing industry. Sort of what I call managed, but like proper high quality, kind of management is a problem. I mean, I think we're fortunate in financial services that because of the way people have been diverted into it, that there's a bigger and better pool there in financial services in the southeast and the UK than there maybe is outside the southeast in other industries. So you're hiring well and just executing. I think it's making sure that you do what you say you'll do is really important. I think the lack of a clear strategic plan combined with middling management combined with over leverage was quite there was a repeat pattern of what I used to see, and that combination of those two things were a toxic combination for a lot of the businesses that I worked with at the time that were really struggling.
And as CEO now president, what part of your job goes towards building the strategy for maybe, I don't know, 1 to 3
Yeah, good
years?
question. I mean, a lot. I mean, it's something that I think I'm reasonably good at. I mean, it's strategic analysis and execution. I mean, you obviously need to understand your industry very well to do that. I've been involved in digital assets and payments for a number of years now, so I've got a reasonably good handle on sort of what good and not good looks like, I would say. So yeah, I mean, the strategic side of the business, I've always been kind of involved, but I'm probably more heavily involved now than I've ever been.
Yeah. One of the questions I had was, you have a background in legal law, that kind of, and so while I was doing the research, I also put this into ChatGPT, as would many people would do. And one of the things that both Claude and ChatGPT was arguing about, that lawyers are trained to reduce risk, and entrepreneurs, founders are forced to take risks. And I wondered, like, how is your two part of your brain perhaps is like fighting to make sure you are doing it the right thing?
I wouldn't necessarily say lawyers are trained to reduce risk. I mean, they're trained to identify risk, right? Specifically legal risk.
Yeah.
Legal regulatory risk to a certain degree. That's what they're trained to identify, and then propose mitigants. Or, I mean, there's advising, should they choose to do this or not? So sometimes it's a binary thing, yes or no. And then often it's well, you could do it. This is how you might want to do it. This is how you can reduce your risk and everything else. So, I mean, I see good lawyers as a risk mitigant tool rather than a risk elimination tool or reduction tool. You're never going to eliminate risk. I mean, you might as well not get out of bed in the morning,
right? Yeah,
right?
Yeah.
But I guess I'm unusual in the sense that I've always had, in terms of the legal sort of spectrum, a reasonably high tolerance for risk, because as long as you manage it, you identify it and you manage it, I've got a reasonably high tolerance for it, and I think I knew pretty early on actually that I didn't want to be a lawyer forever.
Right, really?
Yeah, pretty early on. I mean, I fell out of university in the mid '90s and thought, what am I going to do? And my dad said, well, why don't you become a lawyer?
You did classic, right?
I did,
You did classic, yeah.
Yeah, which is not really there aren't really transferable skills out of that. Well, yeah, I mean, okay, I'll say that. I mean, it's a great degree. It's a great degree for learning how to think.
Yeah.
And I do think you can learn how to think hard, and you think hard in that subject, right? So that's a useful skill to kind of learn. But I mean, it's not. There's no obvious sort of transferable skills directly out of that. So I thought, well, what am I going to do? And like a lot of people, I fell into professional services, and my dad was a lawyer, so I just thought, well, I'll become a lawyer as well. But I mean, I pretty quickly worked out that I didn't want to be a 50-year-old lawyer,
right?
A 50-year-old partner in a law firm. That was not going to be for me. Yeah. So I really like business. So I mean, I took 4 or 5 years in a large global law firm. Worked for a number of years in a financial services business in industry. Did an MBA while I was there. I mean, that really set me up for doing something else. So that's what I did. But again, I was never going to be a lawyer forever.
A lawyer. Do you think your brain works more of an entrepreneur then? How do you recognize your skill set perhaps?
I mean, I'm naturally a glass half full kind of person, naturally an optimist. And I naturally want to get shit done. And I think I see growth opportunities rather than kind of downside. And there are people that obviously we employ that are reported to see the other side of it. But I mean, I'm always thinking just innately, how can we do this? How can we be bigger? How can we do more? And I think that's probably why I'm, I guess, more entrepreneurially sort of, leaning than maybe others. And I mean, I do love business. I mean, I love, seeing, person A to person B doing negotiating and doing a deal. Somebody provides their services in exchange for something else. I think it's a fascinating dynamic. It doesn't matter whether it's, selling a widget or selling a product, selling a financial service or whatever. I mean, I think it's very fun. It's very fundamental on kind of one. It's people who've been doing it for thousands of years, and I just find, I think it's a satisfying
Right.
thing to see happen.
Yeah.
And I'm just naturally interested and excited by that. So I mean, that's probably why, although the training I received in law was great and has been super useful for me in my life, being a practicing lawyer in a firm or an in-house lawyer I was never going to be that guy.
That's interesting. You mentioned about doing deals perhaps
Yeah.
in business, and I get the same satisfaction being in recruiting for 15 years. Part of that is like, when you know that you find the right person for the right place, right? There's so much satisfaction, and then obviously money is a byproduct of that feeling of having done that what you've done. So I totally get you. Let's move on to talk a bit more about BCB.
Yep.
So for people who do not live inside crypto infrastructure, can you explain to me what is BCB in plain English? And if BCB disappeared tomorrow, who will feel the most pain, and also who might feel the most pain first?
Okay, so question one. So BCB at its fundamental level, it is a platform that allows its customers to move value, whether it's fiat money, so pounds, dollars, euros, whatever, or crypto, digital assets, Bitcoin, stable coins, whatever, to move that value from themselves to somebody else and back again at an extremely, fast, on an extremely fast basis and an extremely cost-effective basis. So, I mean, that is the value fundamentally that we provide. If you bring it down to its complete core, there's other things that we sell around that, but that's the primary primary use case, and being able to do that extremely well in the digital asset market is very important because, on the one hand, crypto digital assets, they move pretty quickly themselves. You've got to make sure that the corresponding legs of all that also moves quickly. So, we are valuable to people because of our ability to do that. And it's why we're trusted by, some of the biggest names globally in the space and increasingly outside the space to do that. In terms of what would happen if we disappeared, I mean, who would feel the pain? I mean, our core product is our Blink network, so that's our instant settlement network, again used by some of the largest digital asset firms globally, and we have hundreds of users of that product. If it disappeared tomorrow, I mean, because we are systemically important to the industry, I think if that disappeared tomorrow, it would cause a problem because people are people. Many customers have built their entire businesses on our platform. So if it disappears, they've got a problem.
Yeah.
If we weren't there, it would cause a problem because we are, again, we're an integral part of the ecosystem. So
because Blink is basically the flagship product that processed about 228 billion.
Yeah, I mean it's in terms of volume wise, it's certainly volume wise, it's the largest part of our business. So I mean it's we're doing tens of billions of dollars a month, so pounds, euros, whatever. So it is a very important product for the industry, and in like I say, people built their businesses around it. So yeah.
And is there any other products that really valuable apart from Blink? What are the other products that?
Yeah, I mean our ability to we're multi-currency. So I mean it's not just pounds, dollars, and euros. It's 30 plus currencies now that we kind of use. So again, many of the corridors increasingly, particularly on the stablecoin side, that are being kind of utilized by people when they're using stablecoins to transact. People are using our product. So
and the deal you guys did with SocGen.
Yeah, well, that's
that's
more on the stablecoin distribution side.
Right,
so I mean, stablecoins are an increasingly important part of our business. I mean, I was saying at the start that we started life as an OTC desk, basically buying and selling Bitcoin for people. I mean, frankly, we do very little Bitcoin based flow now. I mean, it's almost all stablecoin or stablecoin adjacent. And I mean, obviously that market, there's an increasingly large number of stablecoins and the volumes and the sort of issuance levels of coins is is growing significantly all the time, and there's still there's a long way to go before that market even kind of slows down. So us obviously being an integral part of the ecosystem, we're growing with it.
Yeah, big market, I think.
For sure.
Question for you is stablecoin better than Bitcoin?
Better?
Yeah.
Better. I mean, it's
from an economical point of view,
it's different.
Stand, right?
Different. I mean, use cases are very different.
Right.
I mean,
for your business, stablecoin is much more bigger part now compared to Bitcoin. Right?
I mean, no question about it. I mean, Bitcoin. How Bitcoin has evolved. I mean, as a thing is really interesting. I mean, it was when the industry started, it was the only one, and people sort of imputed use cases to it that maybe didn't necessarily work. Certainly the kind of payment use case. If you read Satoshi's white paper, I mean, he or she had in their head that Bitcoin was going to replace fiat money as a means of kind of value transfer for kind of goods and services. And I think that's probably been shown to be probably not realistic. But certainly the stablecoin use case. I mean, you can see how in terms of the growth of circulation and again kind of issuance, the opportunity there is enormous. And then it's still pretty small. I mean, if you look at stablecoins, still even now, most stablecoins are basically used for liquidity management on exchanges, right, and for trading. The payment use case is growing very fast, but it's still very nascent. It's still a very small part of the overall ecosystem.
Yeah.
But I do believe this. I certainly think that the utility of stablecoins in flows solves a lot of problems. And I was at a roundtable yesterday, and we were talking about this. I mean, the kind of cross-border aspects of kind of funds flow, a lot of the pain that the traditional, conventional, sort of banking systems suffer, stablecoins do solve a lot of those problems. So it's no surprise that there's an increasing interest in them and increasing adoption of the technology to solve those pain points, namely speed and cost.
Do you think traditional finance initially misunderstood or were they overly cautious about getting into the industry? And with the adaptation of stablecoin and RWA, do you feel that gap is closing?
I mean, great first bit. I mean, I guess they were cautious, and I understand why that is. I mean, let's be honest. I mean, the if you're looking from the outside in, as a head of risk of a bank, or an MLR or a compliance guy, outside in, and you're not necessarily neck deep in the space, I can understand how there was, and it still is to a certain degree, skepticism and caution. I mean, Bitcoin's a volatile asset; it goes up and down. Yeah. You can lose a lot of money really, really quickly if you're at the wrong place, wrong time. The market was associated with illicit activity originally, in the early times, not unfairly. I mean, I can't remember the details, but certainly the sort of pre-2015, a lot of there's these chain analysis firms that can analyze activity on blockchains, and certainly a lot of activity in the early years of sort of Bitcoin you can trace to illicit activity, frankly, dark web and everything else. That I think that problem now is way smaller than it was. I mean, the kind of compliance tools you can now use. I mean, make it very hard, actually very hard to actually use crypto digital assets as a means of it behaving illegally. I mean, it's not impossible, but it's much harder than it was. But there was that.
Yeah.
And then just some of the personalities involved. I mean, this has not been a scandal-free ecosystem.
Yeah.
So I mean, you can understand, I think, from a point of view of a conventional institution with a conventional risk and compliance and legal team, looking at it and going, no thanks.
Yeah.
I can understand that.
Yeah. But I think now, because of stablecoin and RWA, maybe there is more appetite, but then also, because they manage bigger portfolios, they're probably still quite,
Like I say, I mean, the industry's grown up. That's the point. I mean, it's. I mean, I've been in it since 2017, and I've seen the industry mature and grow up significantly. And I mean, you've now a lot of the people that are now in digital assets, I've got TradFi backgrounds,
right.
so they know what good looks like. And so, I mean, the trope that kind of it's still a scam and for money launderers, I think is clearly way out of date.
Right.
I say I'm not going to say that there's zero activity, but I mean, no one's going to say in any financial market there's zero illegal activity. Of course there is.
Yeah.
But I mean, it is a small part, and again, because it's not actually, it's not anymore a very good means of, money laundering. I mean, it's you've got real time analysis tools now. There's these kind of scams and hacks and whatever. Yeah. Wallets can get frozen like in seconds. So I mean, it's a poor means of money laundering now. Not always the case. Wasn't always the case, but it certainly is now.
Yeah.
So and like you say, I mean, the utility in tokenization, real world asset tokenization, stable coins. There's a utility in that technology, which I think is potentially quite disruptive to the conventional financial services industry. So I'm not surprised that you've now got the large institutions, large investment banks with teams that are looking to actually take advantage of the features of blockchain that are genuinely useful, and you're seeing that with stablecoin use cases, obviously, and increasing tokenization. It's still pretty nascent, still pretty small, but it's definitely coming.
Yep.
Because there are advantages in it. Like I say, speed and cost. What's not to like about that?
For sure. And everyone says institutional grade, right? But what does it actually mean in your terms? And also, where do you think crypto native startup founders still get it wrong when it comes to being institutional grade?
What does institutional grade mean? I mean, what does it mean? I don't know. It's a bit of a lazy term, really. I mean, you've got to have the foundations in place to be able to handle significant volumes, significant value transfer, working for people that expect a very high level of service, a very high level of compliance, very high level of reliability, information security. I think that's kind of what it means. I mean, it's a you know what it is when you see it. I would suggest it would be that's a bad answer, but I mean it's people
something like BBC.
BCB. I mean if you look at how have we done it? I mean this is easy to say, but it's more easily it's less easily done. But we have always been a compliance first business. So I mean obviously I'm a lawyer by background. I've still got the qualification. I would like to keep it. As where I sleep at night. So I mean, you want to make sure that you do it right from the start, because it's very difficult if you don't start as you mean to go on. Catching up later is really hard, actually.
Yeah. And
in terms of that leads to the second question: what do people kind of miss? I think a lot of the founders of digital asset businesses were really kind of tech people first. And they've built, very well functioning, clever, code and whatever, while actually forgetting that this is still financial services, and I mean you do need to have, the bits that a regulator or a large institution when they come, because I mean again people now do look at what we'll come on to this maybe later, but I mean risk management is a thing, and so you should expect you to be audited as to your infosec, as to your compliance, as to your platform, because you want to make sure that you're going to be around.
Yeah.
You're going to stick around, and you're not going to just disappear, because there's a cost, there's a time cost and a financial cost to integrating with somebody. So I think it's very easy to forget that short-term gain may well equal long-term pain.
Right.
I mean, I'll give you an example. I mean, the sort of MiCA regime that's come into force in the European Union. The precursor to that was a very fragmented system of sort of local fast licenses in country by country.
Yeah.
And of course, what do people do? They want to move quickly. They go to the
easiest
place to get a license.
Right.
Which a lot of people did, which is fine until the music stops, and there's now a EU wide sort of regime for licensing. And of course, a lot of people who've gone to countries where the bar to get a VASP was quite high, people have found that the gap between the VASP and the CASP isn't that big. But of course, if you've gone somewhere else and you just register and suddenly you're a VASP, the gap between where you are when you get to is like massive.
Right.
And people just did not understand that. And some people left it a bit later and then are struggling. So I think that's a great example. You've got to. It's not fashionable to say it, because VCs want turbocharged growth from nothing, 0 to $1 million in 5 seconds.
Right.
Which is often possible, sometimes possible. But if you're building and if you're aspiring to be a credible financial services provider, you've got to start as you mean to go on.
Yeah. And while we're on this subject, how ECTs with the UK regulator, and obviously there are a lot of things coming in play, FCA.
Mm-hmm.
Do you find FCA is doing the right things in terms when it comes to regulating the space?
Yeah. It's a very I can answer. It's
legally difficult.
It's a nuanced thing. So I mean, I wouldn't want to be a regulator, because I think, certainly in this country, because there's been plenty of scandals over the years, right?
Yeah.
Whether it's mini bonds, whether it's Equitable Life back in the day. There's so many things where there have been accusations that regulators have been kind of asleep at the wheel and they haven't done the job properly. And so again, it's rather like institutions looking in, right? The FCA will have looked into this industry and have seen all the bad bits of it and gone, we don't like that very much. We're not sure we want that. We really want that kind of business here. Because, and this is the reality, right? When something goes wrong, whether there'll be parliamentarians, it'll be the papers, it'll be whoever saying, it'll be consumers saying, where was the FCA, where was the regulator in all this? Boo, 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 and down with them kind of thing. So, you don't want to be that guy that gets blamed. Let's say, again, I made this point to somebody recently. Let's say FTX had come to the UK and got a license in the UK and then had gone down, right? Can you imagine the reaction?
Right.
That it would be all the regulators' fault. Why on earth did they allow these rogues to operate here? So you can understand that there's a degree of caution around this space. Now, that being said, there's a lot of jobs in digital assets in the City of London. It's probably thousands of people, maybe more than that. Probably millions, tens of millions, hundreds of millions of tax revenue. So you also can't ignore that.
Yeah.
Now, we're fortunate, and that we've got a lot of licensed businesses, in the UK, in London, they're doing great work. And there's a regime that the FCA brought in, along with I think it was the last EU directive that Britain adopted was AMLD5 before Brexit. And there was a regime that the FCA had, and the bar was clearly high. And I don't necessarily think that's bad, actually, because the bar elsewhere in the world has not been very high.
Yeah.
So I don't think it's wrong to want to expect that people in this industry are going, should apply, operate to a high level.
Yeah.
I think maybe the mistake that was made was not communicating at the start what expectations were, because I mean, people did apply. Many people applied.
Right.
There was a very long kind of interregnum when nothing really happened, and then a lot of people were then basically either told to sort of withdraw an application and go somewhere else.
In a way, it's discouraging.
It is, but I mean, I can understand that. I can understand the approach to a certain point. I think that it's a shame that we had an opportunity, like in so many ways post Brexit, we had all these freedoms, and then didn't really take advantage of them.
Yeah.
And of course, now in a situation where the world's moved on, and I mean, Britain is now bringing in a sort of extension to the current FSMA regime for crypto, which is fine. The problem is the world's moved on a little bit, and you've now got MiCA for better or for worse. It exists, and it's a regime that is live. You've got other places in the world. In the Middle East is the obvious one. Probably the US will do something. Singapore.
Yeah.
You've got other places in the world that are very hungry for this business, and they are openly, trying to attract people, not necessarily from London, but I mean they want people to come to their jurisdictions and apply and kind of operate, and so we are a bit late, and we're gonna have to work hard, I think, to sell London, sell Britain as a place to do this business.
To that point, like many businesses I work with, they prefer talent from London, right? London, Singapore.
Who's they?
Some of my clients.
Oh, right.
Some of my clients that I work with, especially when it comes to quantitative finance or something like that.
Yep.
They actually have a preference to have people that educated in the UK.
Because the ecosystem's great. It's very deep, and so the experience that you gain is very good.
Right.
Right. I mean, that's London, despite everything, I mean, it's still a very deep and successful, jurisdiction venue for financial services, despite everything, and despite the best efforts of kind of governments and society to sort of drive it out. It's still here.
Yeah.
It's
a shame that it's not working as maybe I don't know Abu Dhabi or Dubai, but yeah, we'll see what happens there. And you mentioned about I was reading one of the articles that you wrote in your website in BCB website is about back in 2022, 2023 FTX collapse and Celsius.
Fun times.
Fun time. Is it?
Yeah.
I really want to know how fun it was. Yeah. And you mentioned about industry need to grow up. What was it like for you guys back in when there was so much, FTX collapse, Celsius? What was it like for you guys? I also read that you had to educate some of your customers that safeguarding funds, etc., etc. Just keen to understand, what was going through.
Yeah, I mean, it was very challenging, to be honest. I mean, you and it wasn't just those two. I mean, it was FTX, Celsius, Three Arrows. My God.
There's so many, right?
So many,
Terra Luna same time?
and then there was several US banks that were, again, very, very widely used by the industry in the US. Literally disappeared within like 3 weeks. They went bust or they were put down by the Fed. So I mean, that period from sort of summer of 22 to sort of early mid 23 was really, really tough. What was it like for us? I mean, I guess we were fortunate in that we were not directly affected by those businesses going down, by Celsius and FTX, because I mean, we didn't have the kind of business which meant that we were directly exposed to those insolvencies. I mean, that being said, I mean, we were indirectly affected because we had customers that were. And I mean, everybody in the ecosystem in that period was affected, whether they had assets on the platform or not. Because I mean, the confidence in I think there was genuine concern that the industry was going to cease to exist. Was
it scary or?
It was scary. I mean, we had We had, because I mean, we had funds at both Silvergate and Signature. Well, we had funds at Signature when it went down. And I remember the Friday, when we had the money and we couldn't get it out, and then that was a whole weekend.
Right.
Fortunately, on the Monday, there was a sort of phoenix, and all funds were returned. So that was a worrying weekend. That was probably the worst weekend I've had during the business, because it was like I did not know whether we were going to get that money money back, which would have been existential for sure.
Right.
So I mean, that was a frightening time. But I mean, to your point around what do we have to do? I mean, to me that was a watershed period, because I think industry really did grow up in that point. I mean, it also coincided there was an awful lot of kind of crazy lending and unsecured lending, and without any kind of risk management, counterparty risk as a concept didn't really exist. No one seemed to really care. It was mad. And I mean, again, don't forget, I come from a background of, conventional finance and everything else.
And that must have helped, right?
Huh? Yeah, but I mean, I never got my head around, even sort of in that lead up, I never got my head around how people didn't care about, because there were so many kind of yield strategies that people were pursuing, right. And I could never get my head around why people didn't care how it was done and what the risk management was. Because I mean, I'm old enough to remember, the period leading up to the Credit financial crisis, and the Icelandic banks that were offering like 8% on deposits for for pounds,
right.
Which was like 500 basis points higher than the sort of base rate. How can you do that? It's just not. Right. I mean, how?
Where the money come from?
And then of course the music stopped and a lot of them went bust. So I mean, I'm old enough to remember that. So I mean, I could never quite understand how people were comfortable lending on an unsecured basis tens, hundreds of millions of dollars to people that with no real kind of counterparty analysis. It was weird. It was weird to me.
Right.
And of course, then the music stopped. And of course, there was a massive compensation the other way, that it went from no one cared to everyone cared.
Right.
And so we had to then people started getting interested in, well, say we've got our money on your platform. How do we know it's safe? So we had to then explain, well, because we safeguard and there are rules around it, and no one ever asks. And then suddenly everyone asks.
Right. But it's a good thing that you already been following like the company's first approach, right?
Absolutely, yeah. I mean, we've never lost a penny of customer funds, because we operate on rules that are prescribed by the various regulations, and I mean we comply with those, and we always have and always will. So it's a very easy question to answer, but I mean the fact that people never really asked it before was always a surprise to me.
Yeah, and obviously, you built this company through turbulence times, regulation changes, etc. I wondered, what is it like to be a leader, go through certain phases in a company? How does that? Is there have a, there's a personal passion of mine. Is how does that affect from a psychological point of view, or is it really, or does it really does not affect, like? It
does. I mean, it does affect. I mean, business is hard. Running a business, setting up business is hard. I mean, this is a bit of a sideline. I wish more people in government today had more of an understanding of that. It is difficult, and if it was easy, everyone would do it. Is the really lazy thing to say, but I mean, it is hard. I mean,
What was the hardest time for you?
That period in 23 was hard.
FTX side.
It was really hard. It's always hard. I mean, that's the thing. I mean, you never have a day where it's not an issue that you've got to kind of deal with.
Right. Firefighting sometimes.
Well,
right?
There's always stuff going on. As something that's more serious than others, but I mean, there's always something going on that you got to kind of worry about and deal with and think about, and how you kind of solve it. And it would be very easy just to be kind of overwhelmed by it all, and just sort of go and lie in a darkened room and hopefully everyone kind of gets you there. But I mean, that's not kind of who I am. I think people that are in business will know this, but you've got to have a degree of, I think, resilience.
For sure.
You've got to, take knocks and keep getting up.
Keep coming back and stay in the race.
Stay in the race. Yeah. I mean, it is hard.
Yeah.
There will never be a day when there's not something that you've got to kind of worry about.
Yeah.
And it's just how you deal with that. I mean, and I think the day that it gets too much is their day to stop. But I mean, so you've got to have resilience. I think.
Do you find as the company grows, because I'm a solo founder, right? And I, to be honest, sometimes find quite lonely, regardless of the support I have. But do you find that it's get more challenging psychologically as the company scale to a bigger size, or is it smaller is easier?
Probably it's harder to get bigger because the downsides get bigger.
Yeah.
Right.
Yeah.
You take money from investors. They're giving you tens of millions of dollars.
Right.
You feel I do feel a responsibility for that. I mean, I know some people would disagree, but I mean, I think if someone trusts you with their money or with their careers, whether they're an employee or whether they're a customer, whether they're an investor, I do think there's a degree of responsibility there that you should take seriously. Not everybody does. Some people are very cavalier with this stuff.
True.
But I mean, I do take. I mean, it's particularly around kind of employees. I think you've got to, people are trusting you with their careers, with their. Yeah. It isn't just about are you going to pay them at the end of the month? It's people have got an expectation that they're going to grow with you, and your name on their CV is worth something.
Right.
So I think, the downsides to you, one personally, and also to people that you work with and that you work for or kind of serve, are big. So there is a degree of pressure on pressure rising from that.
And we talked about this. The big banks are in the crypto scene. How has that changed the way you hire and the people you hire? Given that TradFi is,
has it changed? I mean, we've got a very good team. I mean, I think we're able to attract good people now. I mean, that's the thing. I mean, 6-7 years ago when we started, the industry was regarded as being like either no one knew about it or understood it or didn't really take it that seriously. So being able to bring in really good people in the early days was hard because people were nervous about it. They didn't understand it. Now, of course, the industry's grown up and people can see there are successful businesses out there that are worth billions of dollars. So I think that enables you. People have got over the sort of crypto nervousness.
Yeah.
And they now get it, and so therefore it becomes the industry risk sort of goes away. It's more about the business. So you're definitely able to attract. I think you're able to attract a better caliber of people of person across the board.
Yeah.
Than maybe was the case 5-6 years ago.
And what's your philosophy on hiring and firing?
It's my philosophy.
Or the practice, or whatever you call it.
I mean, my God. I mean, I always see the best in people. People always say it's a bit of a weakness of mine, but I do try to see the best in people. So I like to give people a shot. I never forget people that get the kind of people have given me a shot in the past, and I'm always grateful for that. So I always think if I can do the same, I like to give people a chance and give people some degree of latitude to see how they get on. It's not infinite. It's not limitless. But I think in terms of firing, I mean, at the end of the day, I mean, if you set someone an objective and they don't deliver it, I mean, you've got to offer somebody else that kind of can. And I think hiring is very difficult. I think anybody that says they're brilliant at hiring is a liar, because I think until somebody literally starts working, you can do all the DDing in the world. You can take references. You can interview them in the face. Until they actually start doing the job, you're never going to know for sure how good they are.
It's so difficult, right? I think you're quite right.
Yeah.
It's just sometimes impossible.
Psychometrics, references, blah, 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 right?
Yeah.
You'll never know until someone actually starts doing the job. Then you know pretty quickly.
Right. That's true. That's true.
But I mean, hiring is hard, and anybody that says it's not is a liar.
Yeah. That's why I get paid.
Correct. So we get paid the big bucks.
Big bucks, hopefully. Couple of few last questions. You mentioned about in an article, AI-driven economies need programmable, round-the-clock money. Stablecoins are the natural fit, and BCB provides a trusted infrastructure to support that future. End quote. And if that is the case, and imagine that we are in a world where AI agents are moving money freely, who's going to be accountable? And do you think the regulators will be ready for something like that?
It's a great question. I mean, I think you're already seeing it. I keep reading about AI agents that kind of transfer people's crypto around and sort of sell crypto by accident and that kind of thing. So it's clearly already happening. It's a really good question. I don't know is the honest answer. I think, would I trust an AI agent with my money to sort of do what it thinks best?
Yeah.
I'm not sure. Who's responsible? I mean, my view on a lot of this stuff is that I don't think that people are personally responsible enough for the decisions that they make. People look to blame other people for losses, and sometimes there's genuine fraud and genuine scams, and people have genuinely been been sort of diddled out of the money. But my view personally is I think people should take more personal responsibility for the decisions they make. So if you turn on an AI agent and you let them and you let rip, and you give control of your money, that's really on you.
Yeah.
Honestly.
Yeah.
And that's not probably something. I mean, that will absolutely not be the response of regulators because that's not their sort of that's not how they view the world. But I can see how that would. It's coming. How it'll be handled with extreme caution.
Yeah, it'd be interesting to see what's happened. It's a difficult thing to.
But how regulators will deal with it, I don't know. I mean, AI is a thing hard to regulate, to be honest, because I mean, so much of this stuff, particularly on the kind of autonomous AI type stuff, it's brilliant. I mean, how do you regulate it? I mean, I generally haven't got an answer.
Yeah.
But I think it'll be hard to do.
Do you have AI now in BCB?
We do. Yeah. No, we're very enthusiastic adopters of AI around kind of coding.
Yeah.
I mean, pretty much all of our code now is written by AI, and there's a QA process to sort of make sure that it's okay. But I mean, it's generated already significant productivity gains on that side. I think obviously the next phase is using it, embedding it more in day-to-day processes.
Yeah.
Which I think is there's certain aspects of the flows that we operate where there's clear opportunities to adopt AI in quite a significant way. Obviously, the challenge is to make sure that in doing it, you remain compliant from the point of view of AML, safeguarding, all that kind of good stuff. You can't compromise on that.
Yeah.
But yeah, I mean, there's definite productivity opportunities within our business for AI. I don't necessarily think that it's that it'll replace people in the way that people fear.
Yeah.
But it'll certainly, the people that become conversant and can adopt that and can integrate it into their day-to-day lives will become much more productive.
Yeah.
For sure.
Couple of last questions. 2 questions. One is, it seems like the stablecoin is, increasingly adaptive very, very fast. And I guess BCB will be in a great position maybe in 5 years' time. But I wondered, given that infrastructure is being commoditized, will that be a time that, because you provide infrastructure, will that be a time that your margin's going to get squeezed because of that very reason? Or like, what do you see?
Well, we're already very competitively priced now.
Right.
So he would say, wouldn't he? Look, I think, I mean, who knows what'll happen to the world. I mean, I think if you rewound 5 years and sat people down and said, this is what it looks like now, and people would be surprised, right? So I think, no one's got a crystal ball, but I think the challenge for us as any business is to keep a very close eye on how the market's evolving, and ensure that one remains relevant. I think we've done a very good job to date in remaining relevant, and I think that the services that we offer as the market evolves, will continue to be extremely important, and the convergence between the traditional finance and the digital is increasingly relevant and cute, and we're right in that sweet spot. So we're seeing no signs that the services we provide are not not in demand, not continue to be in demand, and so we're I think we're very well placed.
Yeah. Strip away the company title, infrastructure, and technology. What do you think will remain fundamentally human in leadership?
I mean, we'll always have people in businesses, right? I think this idea that there'll never be you can have businesses with like no staff. I don't really think that's realistic.
Yeah,
it'll be different, but I don't think that'll be the case. So you're always going to need leaders to direct businesses, to motivate people, to get the most out of them that you possibly can, to ensure that you walk the walk as well as talking the talk, that you drive the strategy, that you move businesses forward. So, and I think to be honest, I mean, it doesn't change that much. Whether it's a aluminium extruder in the Midlands or whether it's a fintech in London. I mean, people still want the same thing, which is they want people come to work every day, right? And do they want, what do they want? Some people just want a salary. Some people want personal development, or some people want growth. People want different things. I think the ability of a good leader is to recognize what can you do to ensure that the people that you have in the business are doing the best job that they possibly can.
And understanding their needs, right?
Understand their needs, understand their needs, and being, putting yourself in their heads and saying, how can I motivate these people to go that extra mile? And I don't actually think fundamentally that there's that much difference. And I don't think so. I don't think it'll change that much. What will change is people's motivations may change.
Right.
And it's recognizing that I think is the key thing, because I mean, the toolkit for running a business in the 80s was very different to what the toolkit for running a business now, because people's needs are different.
Right. Yeah.
It's recognizing that.
True. And I think AI will never be able to recognize the actual motivation and needs of a person. So therefore a leader, will be, key.
I mean, who knows?
Right.
Who knows?
Yeah.
I mean, if they do, I mean, that'll be very interesting. But
It will
I
be
think
interesting.
we're away from that yet.
Yeah. Oliver, thank you so much for your time.
Great pleasure.
I wish we had more time. I think we got lots of stuff we could have gone, but yeah, thank you so much.
Thanks a lot.
Thank you.
Thank you.